Good afternoon. It is Wednesday, June 19th, and I am recording a quick exam review for you for your final exam tomorrow, Thursday, June 20th, 2019. As we've said many, many times, this exam will open at midnight, a little after midnight on Thursday, and it will close 11:55 p.m. on Thursday. You will only have one attempt with no check my works, and unless you have accommodations, there will be no extension of time, and unless there are extreme extenuating circumstances, there will be no change in this. Last year, our extenuating circumstances had to go through the provost's office. So, as you know, you have to ensure that you have a strong internet connection and that you are prepared with your computer and everything's ready to go. Because yes, 2 hours and 45 minutes is a pretty long time for an exam, but our comprehensive final exams during a regular semester, face-to-face, are 3 hours, and this is very comparable. So this is a very quick review that I just decided at the last minute I needed to prepare. My apologies for any mistakes that I make. I'll probably push pause, grab some water here and there, but I'm just going to run down through some of the things that we've done, and I might even pull up the syllabus to give you an overview. In fact, I'm going to switch real fast, pause, and pull up the syllabus to give you an overview. And we're back, and here is the overview that I wanted to provide you. Of course, several of you have asked me what OL stands for, which surprised me. So OL stands for online. F2F stands for face-to-face. Of course, this is an online class. There are some blended courses. But I wanted to go through the modules. As you know, we are required to do a standardized template in the School of Business. I believe almost all courses are adhering to this policy. So Module 1, we started with understanding the 3 financial statements. And this was a tremendously key chapter because without an understanding of the financial statements, you did not understand the rest of the course. Chapter 2 was analyzing business transactions, debits and credits, and so forth. That, too, was a key chapter. If you want to know any place that you can go back to for a review to give you a full overview of what happened in this financial accounting course, I would say go back and look at the content in Chapter 1 and 2. Look at the videos I provided. Look at the pencasts that were provided. You might go back and look at some of the quizzes from chapters 1 and 2, or look at the narrated PowerPoints. These are the objectives. We spend considerable time writing these objectives so that you know what's going on within a course. I hope you'll take a little time to understand what you were trying to learn in the first module, first week. Module 2, we assume that you understand chapters 1 and 2, and we start talking about adjusting entries. As you know, adjusting entries are there to ensure that the financial statements are accurate and up to date. You might have to adjust for depreciation expense. You might have to adjust for uncollectible accounts, supplies that have been used, insurance that has been used, unearned revenue that you have completed the work on and that you have earned. There are numerous purposes for adjusting journal entries. They are done right before the financial statements are prepared. And that's why we moved straight into Chapter 4, which was talking about completing the financial statements. And this is where we talked about the accounting cycle, and we talked about closing entries. And closing entries, as you know, are a little tricky, but that's that closed revenues, expenses, income summary, dividends, REID. That was Exam 1. Exams 2 content, Modules 3 and 4, dealt with inventory. This is where we learned these new terms. You did a few little calculations, but nothing huge. We talked about the concept of cost flow as opposed to goods flow. I think a lot of you got that mixed up. When we use LIFO, FIFO, etc., we are talking about what cost are we going to attach to our cost of goods sold. We are not discussing how we sell our product. So, for example, a car dealership definitely wouldn't go in there and sell their product LIFO. They wouldn't sell, or let me switch. A produce stand would not sell their product LIFO. They wouldn't, but they might choose LIFO for their inventory cost accounting. So that's an important determination. So merchandising and inventories includes not only the FIFO, LIFO, but it also includes understanding the financial statements of a merchandising system. And that is where you say, what is my beginning inventory? Add my purchases, subtract out my ending inventory to determine my cost of goods sold. And that's an important concept for this course and for when you move into your BADM 212 course. Let's move to Module 4, where we talked about cash. We were able to skip the calculation of a bank reconciliation, but we went into a great deal about the objectives and elements of internal control and what we do with bank accounts and how we control our cash, because cash is very liquid, of course, and easy and susceptible to being embezzled. And then we talked about in Chapter 8 receivables and uncollectible accounts and the allowance for bad debts. You might want to go back and review some of that. You will not be doing a calculation, but there are lots of terms within this area. Let's move then now to the new information, Chapters 9, 10, 11, and 12, that will be on this final exam and the biggest component of the final exam. We talked about fixed assets, which are capital expenditures, versus expenses, which are revenue expenditures. So a capital expenditure is something like, let's take, for example, an individual that owns rental property. A capital expenditure would be if that individual goes in and adds a bathroom or expands the house or builds a garage. That's a capital expenditure. It's a big, important expenditure to make the rental property better, bigger, longer lived. An expense, however, might be if the owner of the rental property goes in and has the carpet washed between tenants. And that's considered a revenue expenditure. I've seen a couple of questions on the final exam related to this concept. Depreciation expense is a content that we had in Chapter 9, and the idea of a contra asset called accumulated depreciation. Straight line method is our most important method. We talked about the disposition of assets and how depreciation expense is not value, but instead it's the allocation of an asset's cost. So many of you in your discussions seemed to indicate that you thought that we were showing that a capital expenditure or a fixed asset had declined in value when we record depreciation expense, and that is not the case. Generally, depreciation expense is just taking the cost of that asset, dividing it out over the units of production or the estimated useful life, and then matching it on the income statement so that we can have a better understanding of what the actual net income is. Payroll liabilities were a big chunk of our section on current liabilities, and these are liabilities that occur whenever we make payroll. I enjoyed reading your comments about whether or not you felt the payroll tax withholdings were good or not, or what your comments were. Sometimes we need to get out of the depth of understanding just the accounting components and start thinking sometimes about the political aspects of it. We also talked about installment notes, for example, mortgages, and the fact that each one has a principal and interest component, and I believe there's a calculation on the final exam related to that. Let's look at the chapters that closed last night. Module 6, chapters 11 and 12. Long-term liabilities was bonds. And many of you were wondering, why would a company sell bonds instead of going to the bank to borrow money? And I did a little bit of research myself to see if I could find an exact answer, and it seems to be the notion that interest rates are better with a bond rather than what the bank might charge a company. There's a little bit more flexibility with stating your terms, but all in all, it depends on what the board of directors, the BOD, determines as far as the corporate strategy. So as a quick reminder, the board of directors is an elected position, elected by the shareholders. So if you own stock, you will be given a vote for the board of directors, and the board of directors are the ones that determine who management is going to be. So being on the board is a big job. Last chapter, corporations with stocks and dividends, etc. This is where we did some basic ratio analysis with our annual report project. We talked about stock splits and stock dividends. We talked about treasury stock, which is also known as repurchased stock. We talked about preferred stock and the different categories of preferred stock. For example, there is cumulative preferred stock or non-cumulative preferred stock. You might take a minute to put some notes down. Which types of stock does dividends and arrears apply to? Interesting concept to look up. We also talked about how the statement of stockholders' equity, this huge thing that you did on your last discussion last night, the statement of stockholders' equity is a replacement because the statement of retained earnings is actually built into it. So you'll be calculating retained earnings on your final exam, not the statement of stockholders' equity, but it is important to be familiar with this. And here we come to it, the final exam. I'm going to change this because I'm only allowed 5-minute increments whenever I set up the exam. I want to let you know that the final set of financial statements will be prepared on the exam itself. You will not be doing this on a separate piece of paper and sending it in. So there we go. This is a quick review of the modules. Close this down. There's some research I'm working on. There is my email. Let's see if I can't find the, here it is, the test. And I'm going to, as I said, this is very impromptu, but I think it might help. Let me see if there's anything in here that I haven't covered. As we know, cumulative content is required. You need to have that strong internet connection. Books and notes, but you must work alone. I do know that there has been some academic integrity in this course and in other courses. There are ways for us to be able to tell if you are not working solo or if you're finding your answers from other sources. And it's really the most uncomfortable thing. And with the Citadel having a focus, a very strong, all-encompassing, integrated focus on ethics, I hope that you will understand the rules of academic integrity. Working alone, not talking to, texting, or accessing another individual or any possible purchased assistance for the exam. But I can tell you that the types of research that I do in the conferences I attend have shown us exactly what types of things go on. So I'm hopeful that that is not the case and that that will not be the case tomorrow when you take your exam. Let's see what I didn't cover in here. I don't think we talked about depletion when I just discussed the modules that relate to natural resources. We didn't take too much time to talk about the amortization of premiums and discounts. So knowing, first of all, by this time, hopefully you understand what causes a premium or a discount, but that changes interest calculations. So if there's a premium, it's reducing interest expense. If there's a discount, it will increase interest expense compared to the amount of cash that's paid. I'm going to pause. If that's something that you did not understand, please go back in and look at how interest is calculated, interest expense, compared to the cash that goes out for interest on the sale of a bond at a premium or a discount. Let's see what else I didn't touch on. Earnings per share, there's a calculation on the exam for that. Really, it's somewhat simple. You take the earnings or net income of a company and divide it by the shares of stock outstanding. But there are some areas that they can make it a little bit more complicated. This is an important essay. I want you to make sure that as you're going through the exam that you understand that this is going to be coming up. I don't have any control over the way the exam is provided to you. I'll go back in one more time and see if I can't put the financial statements and this essay at the beginning so that you can time yourself for the rest of the questions. Matching principle. Gosh, that's almost the answer to half of the reasons why we do all these entries, such as uncollectible accounts and depreciation expense, interest expense, bonds. Is we're trying to match revenues with expenses in the right period. That means that you want your expenses to be recorded in the period that the associated revenue has been earned. There is a question I saw in there about issuing a bond, and do you recognize which would be the correct adjusting journal entry? So you might want to go back and look at that. Question about T accounts and the left and the right side of debit and credit. What else have we got in here? I think we've covered just about everything else. Got a few things in here about how you might go in and study. I know that your book has e-book study components, and I think that those would be very helpful. But remember that you can review some of the work that you've done once it's closed, and the instructions are online. So best wishes tomorrow. I should be around just about all day. There may be a couple of hours when I'm out of pocket. So I look forward to hearing from you. I thank you for your feedback on the course evaluations that you provided yesterday. We got almost 50%, which is important. That's better than getting something like 10% that we had before. And I wish you the best with the exam tomorrow.